Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to the daily market analysis show where we look at how the market performed today. What went wrong, what worked, what didn't work, how did it move during the day, and then we also look forward how we can plan for a better trade tomorrow. So welcome to the daily market analysis show, and if you're not subscribed, subscribe and share it with your friends and colleagues so that everyone benefit. Thank you so much for wasting time. Let's look at what we're going to do. So this is for November 16, 2021, and we look at the pre-market analysis for tomorrow, and we look at all of these parameters that is here on the left side. And in addition to that, we will do option risk analysis. We look at the volatility. We will look at institutional participation, sectoral watch, global commodities, and then wrap up with some actionables for the next day. Right, so price patterns, we have the charts here. So price action is showing that this is an attempt to move up and then that face resistance, right? It's kind of a spinning top with a small body and then almost equals as a fix. And right side of the bank Nifty, you can see that that's kind of inverted hammer, which could probably mean that there is a trend change from the down to the up. May not know your confirmation, you can be sure of that, but you see the wick size more, which also shows that there is bearish presence there. It is facing resistance basically. So what happened, it is a flat day for the Nifty 6 points, and then we are spinning top, flat day again for Bank Nifty 30 points down actually, and an inverted hammer kind of pattern. We already saw that. So intraday it was a gap up actually. Look at intraday what happened. Closed here and then gapped up and then faced resistance like at 18200 and then trended downside more than to the support of the previous support zone from where it gapped up. So thereby ending flat. Bank Nifty also gapped up and then trended downside and then took then consolidated just before the previous support zone. Right, this is support zone and this close to that. But the thing is, it could not manage to close above the previous day close, but Bank Nifty could. So Bank Nifty seems to be price action wise more bullish, but because Bank Nifty also is closed above the moving average. If you look at the Bollinger Bands, you can see that Bank Nifty, Nifty, left side what you see is Nifty. So Nifty seems to be slightly more bullish because of the fact that it closed above the previous day's candle close, and also it is closed above the Bollinger 20 moving average support. But Nifty, if you look, it is far away and nearer to the lower band price zones. And consolidation is very much evident from the contraction of the volatility that you can see in the Bollinger Bands and both the indices. So that may continue for a longer time. But a skews is not seen yet. Skews would mean that there will be only small volatility and it can burst out one of the side after some period of time. But here it may be a highly volatile consolidation that may be happening. Now we will look at the support and resistance levels, see what happens. It is facing resistance first upside 18200, and above that you have 18354 levels, and above that you have the all-time high of 18600, and the support zones would be 18100 where it closed yesterday. If that is broken, then you have again 18,000 back. Then if that is also broken, you are back to 17,850 kind of levels where it was previous swing low. And then if that is broken, you will go back to this 17,600, that is also previous swing low. Right side Bank Nifty, you can see that it is resisting at 39,000 kind of levels, and above that you have the resistance of 39,500, and then above that you have 40,000 and 40,200 kind of levels. And similarly in the downside you have 38,500, which is going to be the first support zone. If that is broken, you have 38,000 zones, and if that is broken, you have 37,800. Right, so that's, and also make a note that it is at the trend line channel from the March to previous swing, major swing low. If you do a trend line, it is on the edge. It's consolidating, but it's not breaking. If this is broken, then it may be no bearishness that could be fairly large in size, right? So, but Bank Nifty may be consolidating around these zones most likely. So support and resistance on the Bank Nifty and Nifty is clear. Bollinger Bands we already discussed, and momentum divergence on the weekly on the Nifty is still there, which means there is a chance that it can go to 18,600 levels back again, but still it is very much within the consolidation upper band zone. And momentum, you can see that it is lost the momentum in the short term to sideways from the bull zones, and now it is sideways on both indices, you can see. But on the medium term and long term weekly and monthly charts, the momentum is intact in bullish zones itself, and divergence is only on the Nifty, which is another reason to say that Nifty is more bullish now. Trend indicators ADX is showing that it is a crossover that happened. The third reason, first is it closed above, raised is closed. Second is moving average 20, it closed above that. Third is there is a weekly momentum divergence, and fourth reason is the trend indicator ADX crossed over to the day my positive zones in the Nifty. Bank Nifty has not crossed, it is still short term bearish, but long term, not long term, it's on the weekly charts. In the medium term, you can see that it is having a bullishness on both the indices, and Bank Nifty especially. The ADX trend, the green part of the directional movement index movement indicator, the green part, the strength of the trend is seen rising in the Bank Nifty weekly, or not on Nifty. Nifty is falling, but it's still bullish on both. So that's about the trend, and the volatility, if you see today, it's slightly short up 2%, very little after it. So it is trying to maintain the 15 as a range bottom on the India VIX, and volatility 15.26 is the implied volatility, and 35% IVP, and IV is obviously 35% is hovering around that range for a long time now, to end up to 40% of IVP. Right, so the range formation seems to be getting confirmed unless and until 14 is breached, and then further dips. Most likely it may not happen. It may be climbing back to the 18-19 levels, right? Which probably means market may make some additional corrections, or it may hover around like this within a 15 to 17 kind of frames, and then further make the up move. Never know. So that's the volatility. And then open interest rate, if you see, you can see that left side you have Nifty, which is overall seeing a 18th expiry November bearish charts with call writing dominant, and Bank Nifty also the call writing dominant. Where is it dominant? 39,000 dominant, huge resistance seen on the Bank Nifty, and 18,200 and 18,500 both seeing huge resistance. So for 18th expiry, the supports are seen at 18,000 also, and also huge support is there at 18,500. Whether it will hold the 18,000 or whether it will take a dip to 7,500 is question for us. We now know that. Short period is what you saw on the futures open interest, and PCR 0.8 is slightly, you cannot say it's bearish at least. Bank Nifty is 0.55, put call ratio is slightly beyond the bearish side. Right, so Bank Nifty supports support is call writing is seen 38,000 and 38,500, and 39,000 and 41,000 huge resistance. 39,000 has got huge resistance. So it's So banks it's a tight. It seems to have bottomed out. Right, Nifty probably there is a it all depends on whether it's able to hold the 18,000 which was conquered earlier this previous week yesterday. So that's open interest, and now if you look at the security performance, IT closed 0.5% small body candle, slightly green, but it's on the edge of the momentum on the short term, on the edge of bullish momentum basically. So you can pick the stocks in the IT now if it sustains and does not slip the momentum back short term. Metal will slip down and stay away sideways momentum. Auto closed red today, and the momentum also is momentum is still in the bullish zones, but today it was a flat small body resistance seen on the charts on the auto. So if you can think about picking the stocks with momentum sustains, so IT auto can be in the watch list, cautiously bullish you can say. Pharma closed green 1.5%, but sideways momentum, so wait for more time. FMCG 1% down, 1% green up today, but momentum is still the sideways should slip. Reality also slightly up, formed a hammer, and then Momentum is on the edge. If it does not slip further down, then you can. So yeah, you can think about picking up stocks in this. So IT, auto, and realty are the three sectors which can be thought of for long positions if the momentum sustains. Rest, metal, auto, metal, pharma, and FMCG are sideways and little bit. Institutional participations today is giving some hope. There's a 400 small buying, 400 crore small buying has happened, but domestic institutions have bought big 1,500 crores above. So overall, if you see domestic institutions have been in November month having big buyers. BIS about 7,250 crores, while 5,100 plus crores of selling has happened from the domestic institution. So there is some kind of balancing between the DIS and FIS happening, but it is good that the last 2 days FIS participation has improved. Dollar index, if you see, you can see that there is some kind of consolidation that is happening at the 74 kind of pulse after it faced resistance at 75 and slipped back. Similarly, the dollar index, if you see, it had broken out and then of a major resistance zone, and now it is kind of consolidating with a um, yeah. So now its upside is there is no resistance clear for long until 99 kind of level. So yeah, so it is broken out basically. Whether it maintains that level, as long as it maintains level, US dollar index will be more strong, right? So you can see that the crude oil has slipped back and cooled off to 78.5, which is good for our economy, Indian economy, and so that is something it may probably take support. But remember that it is broken out of this major multi-year resistance zone, so it may be coming down and consolidating around this. There is some fundamental resistance from the US side today for the crude oil crash, so this is something that's good for us, and markets also may digest this and then maybe reacting for the next few days, mostly on the positive side. So gold, you can see that it is broken out of a channel which is also a cup and handle part, and then it seems to be facing resistance right there at 1876, but it's overall great momentum and that's a breakout bullish up move that you're seeing in the gold. Dow Jones is giving green, and all the US markets other two S&P 500 and Nasdaq is all seeing. European markets also seeing green. So you have to recheck and reconfirm if any big movement happened either on the upside or the downside tomorrow morning for the pre-market to confirm if that is reflecting on the exchange or not. Actionable interglobe aviation continues to be an actionable flag and pole pattern which is broken out, and then it's a inverted head and shoulder pattern which is broken out, and so it's super bullish, and momentum is great. Volumes are above average, big volumes, and trend is also big. Trend indicator is also big on all time frame. So this is a daily chart. So this is clearly a breakout, and it's going to sustain more mostly. Type stop loss and get play the game. Another one is Metropolis Healthcare, which was resisting continuously multiple times 1, 2, 3, 5, 6, 7, 8, 10 times continuously at the one particular zone, and you can see that daily today it had broken out of that major zone where all the resistance is there. So definitely if that much of consolidation length can go upside is what technical analysis shows. So it's great volumes and great momentum, great trend, and a breakout which was tested multiple times. A breakout from the resistance zone which is tested multiple times. So Metropolis Healthcare and Intergo Aviation are two stocks that can be used for swing trades for the next coming days or weeks. Now to wrap up, it's a mild bullish or a neutral is what my market view on short term for tomorrow. So Nifty, so reasons are listed here. So why I am slightly bullish is 20 moving average was conquered again, which is good, although it is a red bearish candle that we have, but it's a positive thing. And after 2 weeks of sell-off, big sell-offs, multiple weeks, not 2 weeks, multiple weeks, the entire October was selling. Now institutional participation has improved, especially the Fyers have started buying the last 2 days, which is positive. Now weekly bullish reverse divergence still in play, which can get it back to the place. Right, so presence of the bulls are seen. The charts are showing that there is a slippage of the momentum and the trend also on the short term, on the daily charts. And the BANKNIFTY is weak as compared. It's on the edge of a trend line channel. So these are all reasons why it is only mildly bullish, not fully bullish, right? Or not moderately bullish. Last 2 points I repeat every time. That's about the volatility range formation that's happening, and there can be expected big V-shaped moves and choppiness as long as it is there and it is trying to form this range of between 15 and 19 or 20. So intraday traders has to learn the game and then know how to identify the reversal candle patterns, or they should play the hedge ideally, hedge positions like interest spreads fully hedged, right, or vertical spreads instead of going for naked, right. I'm expecting that the VIX may go up slightly, slightly on the upside. So where spike strategies like interest spreads can benefit obviously from that. So this is kind of a volatility in the option strategies repetition of that happens every day. So that's a wrap up. My view is clear, I hope, and hope this gives you some inputs on forming your own view on the market and your own trading plan so that you get a good trade tomorrow. Yeah. Once again, please subscribe and share to maximum. We have very low subscriptions compared to the effort that is taken to put in these videos every day. So hope you will appreciate and then do the necessary. Thank you so much and happy learning and happy trading. Bye.